Okay, this is Attorney Sarah Holmes, and I'm going to explain the latest two SBA programs for small business owners. The date is April 1st, 2020. The first program is the Economic Injury Disaster Loan Program from the SBA. This is not a new program. It's just expanded some of its offerings and dropped some of its traditional requirements, but it's a loan that has been around for quite some time. Some people got these loans, for example, after natural disasters like a Hurricane Sandy. The other program is new. It was just passed last week, and it's the Paycheck Protection Program. So we're going to go over these two loans today and what is the difference. First is, who is the lender? People seem to have a lot of confusion around where these loans are being originated, where they go to apply for them, and who is going to enforce these loans. So the Economic Injury Disaster Loan Program, which we've abbreviated here as EIDL, is through the SBA. For that loan, you would go to sba.gov and apply for that. The PPP, the Paycheck Protection Program, is backed and guaranteed by the SBA, but that is actually through a bank. And it's a bank that's been approved as a lender by the SBA, and it's typically one that has, in fact, been responsible for administrating 7A loans in the past. So if you want the Economic Injury Disaster Loan, you go and apply at the SBA website, which you can do right now. If you want the PPP, you're going to have to find a bank that's offering that loan. And as of today, that's actually not available yet. It's going to be available Friday, April 3rd. What's the maximum amount of the loan? All right, for the Economic Injury Disaster Loan, the maximum amount is $2 million. There is an initial $10,000 or up to, the language is up to $10,000 forgivable advance. Now, when you go to apply for this loan, you'll see that there's not any place for you to enter the amount of money you want to borrow. That's because the SBA is going to look at your ability to repay, your business finances, and then evaluate and determine what amount of a loan they're going to give you. For the PPP, that could be up to $10 million. However, that loan amount is limited to an average of your monthly payroll times 2.5. So if your monthly payroll is $50,000, that times 2.5 would give you a maximum PPP loan of $125,000. So PPP is limited by your actual payroll costs and a multiple thereof, and EIDL is up to $2 million. You don't get to choose the amount. It's going to be based on your business's financials. Now, there's been some confusion as to whether you can actually have both loans at the same time. The answer seems to be yes, but that these loans have to be specified for different purposes. For example, you can't do the loan application and say, I'm going to use this EIDL money for Joe and Bill's payroll in April, and then also accept a PPP loan for wages for Joe and Bill in April. That's duplicative, and you cannot use both different loans for the same intended expenses. If you do it for different expenses, then you can get both loans. What's the annual interest rate? For the EIDL, it's going to be 3.75 for businesses, 2.75 for nonprofits. For the PPP, it's going to be 0.5%. So for anyone that is used to commercial loan terms, especially for small businesses, you know that these are pretty amazing interest rates on commercial money. What's the term of the loan? The EIDL could be up to 30 years. We don't know yet because we don't actually know anyone that so far has been offered an EIDL loan for the COVID issues, and we haven't seen the loan terms. So not everybody's going to get a 30-year term, but they should be some type of longer term loans. The PPP, it's a maximum 2 years. When would the first loan payment be due? This is important for planning your post-COVID-19 business life. EIDL, you don't have to make a payment for 1 year. PPP, 6 months. So keep that in mind as well when planning which financing you might apply for. What can you use the loan for? Again, I said you could possibly get both loans. You can't use them for the same written purposes. EIDL. EIDL you can use for a lot of different things. Financial obligations of your business, paying your vendors, rent, and any kind of operating expenses you have. Now, SBA used to, well, not used to, but their traditional loans have a lot of restrictions in terms of what you can use them for. For example, most of these regular SBA business loans cannot be used to go purchase like a building, for example. Many of them also had restrictions that they could not be used to pay off existing debt. Some of these restrictions for the COVID issues are going to be lifted. I don't think the commercial building one may be lifted, but you may be able to use EIDL to pay off some existing debt. I don't know that at this point. Again, we're not sure. We haven't actually seen any loan documents been given to anyone. So check the fine print on these. If they offer you an EIDL loan, you need to go over it with a fine-tooth comb to see exactly what you can and cannot use that money for. But know up front that you can use it for payroll, for your rent, and for your normal operating expenses. Now, the PPP is a much more narrow, limited ways that you can use those funds. That's limited to payroll, group healthcare benefits, insurance premiums, interest on a commercial mortgage, like, for example, you own the building that your business is in, rent, expenditures and obligations under your lease, and utility payments for your business. So the PPP is a bit more limited. And note that we're going to talk about this in a few slides. The PPP has a forgiveness aspect to it. However, for that forgiveness, at least 75% of the PPP money must be used for payroll in order to get the forgiveness. Now, if you ended up getting that $10,000 or up to $10,000 advance under the EIDL, that's going to reduce the amount of the forgivable amount of money you can get under the PPP. So you're not getting both amounts of money for free. You can get the 10 grand or up to 10 grand in EIDL, but if you later get a forgivable PPP, the forgivable amount is going to be reduced by the 10K you already received. Okay, what collateral is required? This is important. SBA traditionally had very, I'll call it draconian collateral requirements in that you would typically have to put up like your house, your personal residence as collateral on an SBA loan, so that if you ever defaulted on that loan, the SBA would get their money back when you ever sold that property. For this program, for COVID, it's so dire that they have taken that away. They're not requiring you to put up residential real estate, but they will place a UCC lien against the assets of your business. So if you default, they're going to go execute against whatever assets you have in the business. PPP, no collateral required. Is a personal guarantee required? Again, any type of business loan will typically require you to give a personal guarantee, so that if you defaulted on the loan, they're going to come after you personally, your bank accounts, your assets. Now, EIDL, over $25,000, they're going to expect a personal guarantee. The PPP, no personal guarantee. That's pretty amazing. Rarely will anyone ever lend you money without a personal guarantee. So the PPP looks like it can be a good deal. There are some drawbacks to it, which we'll get to in a minute. Is there a loan forgiveness program? For the EIDL, the answer is no, except for that $10,000 advance. If you take that $10,000 advance, that is forgivable whether you go on to get the EIDL loan or not. However, if you go on to get the PPP loan, as we said before, the amount of the forgiveness is going to be reduced by that $10,000. Otherwise, think of the EIDL as very much a traditional business loan. It's going to have an interest rate, albeit lower than what you could typically get. It'll have a repayment period, albeit longer than you would typically get, and the payments won't be due for a year. But make no mistake, it's a loan. It's a business loan that has to be repaid. PPP, that does have a forgiveness aspect to it. However, it is based on the employer maintaining its salary levels or quickly rehiring people within an 8-week period. And that 8-week period is like from now through June. It's not in the future. If you are not able to keep the people employed, like you're going to cut staff, you're going to lay people off, you're going to switch them from full-time to part-time, that loan is not going to be forgivable, or its amount that could be forgivable is going to be reduced based on what you do with your payroll. So when you think about the PPP deal, it can be forgivable, but you have to keep the staffing levels the same for 8 weeks. Now, let's say you're not able to do that. Let's say within that 8 weeks, you're like, look, I just can't do this. I got to lay these people off. It converts to a loan, and it converts to a loan at the terms we just went through, which is the 0.5% interest, repaid within 2 years, and the payments start in 6 months. So again, make no mistake, the PPP can in fact end up being a loan that you have to repay if you are not careful and if you end up reducing staff within the specified time period. If you're able to keep your staff the same during the time period specified, you can in fact apply for forgiveness of that loan at the end of the 8 weeks. So you're just going to have to keep very careful track of these funds, keep very careful track of what you use the funds for, because you're going to have to document all this stuff. Right now, because of the severity of this whole situation, things are coming out very quickly. Honestly, from the government, a lot of the stuff looks quite sloppy. They seem to be just throwing out the window a lot of things they would normally do when they agree to loan people money, at least at this early juncture. Make no mistake, eventually they will come around and clean all this stuff up. So don't think that it means you can be sloppy right now in your financials and with the records that you're providing them and making estimates and guessing about things, because eventually they will come back around and clean everything up. And you don't ever want to put yourself in a place where you can be accused of loan fraud or anything like that. So just be careful. How long will the application take? Okay, we're hearing EIDL could be 2 to 3 weeks plus an additional 5 days for funding, but we don't know. Again, we haven't actually seen anybody that's been offered one of these loans yet. Those applications are available now at SBA.gov. PPP will be available from approved banks starting this Friday, April 3rd. Go check out the sample loan application they have on the SBA website so that you can see what type of things they're going to be asking you for. Again, if you are a business that doesn't have your books together, your tax records are crummy, you got to get that stuff together like now before you start applying for these loans from a bank, because while maybe the government is being a little lenient right now, the banks are not going to be. So I'd expect banks to give you a thorough vetting and be asking for your financials and your proper documents. So start getting the stuff together now and contact your bank as to whether they're going to have an application available on Friday for the PPP. Okay, do you need help evaluating? This is a lot of information and a lot of different mental gymnastics and math that has to be done around, what's the best deal for you, how much is actually forgivable. So who should you be talking to? You should talk to your accountant, certainly, your business attorney, your financial advisor. You really need to sit down and look at what your payroll levels were and what is the anticipated demand for your business once some of the COVID restrictions are going to be lifted. There are a lot of people, a lot of industries that are going to have an amazing amount of pent-up demand for their goods or services once this is all over. There's going to be other people whose goods and services depend on a large portion of people having disposable income. If after all this is over, so much of the workforce has lost their jobs, they're uncertain, they're scared, that's going to reduce the amount of disposable income going out into the economy. And it's going to have a ripple effect in that some of these businesses offering more discretionary, disposable income type things could take a larger hit over the long term. So be very careful. If you had developed a business plan for 2020, you need to now revise that plan post-COVID. Things are not going to go back to normal even once these restrictions are lifted. I think we have to plan on maybe, I don't know, hopefully no more than a year, maybe 18 months of just things being wonky. The markets being wonky, consumers acting wonky, everything just being different for a while. So go back and revise your business plans, because you can't go into debt having no idea how you're going to pay back the money, where it's coming from, and having no sound plan. So if you need to contact us, if you'd like our help talking through some of these issues, if you want us to work on a business plan with you, help you evaluate which of these programs could best help you, feel free to call our office, 215-482-0285. You can also go onto our website, which is www.phillysmallbusinesslawyer.com, and schedule a discounted COVID consult. Or you can email us, info@phillysmallbusinesslawyer.com, to get info or set up a call. All right, so stay healthy, keep your business healthy. We'll get through this together, and hopefully in just a few months' time, we can all be back up and running, at 100%. Let's keep our fingers crossed. All right, thanks.